Mutual funds are one of the simplest ways to start investing and building wealth, even if you're new to the financial world. They provide an opportunity to diversify your investments, reduce risk, and grow your money over time. Here's everything you need to know to get started. What are mutual funds? A mutual fund pools money from many investors to invest in a diversified portfolio of assets like stocks, bonds, or other securities. Managed by professional fund managers, mutual funds make investing more accessible to individuals who might not have the time or expertise to manage their own investments. Key features: diversification. Spread your money across multiple assets to minimize risk. Professional management. Fund managers make investment decisions for you. Accessibility. Start investing with relatively small amounts. Types of mutual funds. Understanding the different types of mutual funds can help you choose the right one for your goals. Equity funds. Invest primarily in stocks. High growth potential but comes with higher risk. Ideal for long-term investors. Bond funds. Focus on fixed income securities like government or corporate bonds. Lower risk but generally lower returns. Suitable for conservative investors. Balanced funds. Combine stocks and bonds for a mix of growth and stability. Moderate risk and returns. Good for investors seeking a balanced approach. Index funds. Track a specific market index, like the S&P 500. Lower fees and passive management. Great for beginners looking for low-cost diversification. Money market funds. Invest in short-term, low-risk instruments like treasury bills. Focus on capital preservation and liquidity. How to start investing in mutual funds. Set your goals. Decide whether you're investing for retirement, education, or short-term needs. Choose the right fund. Assess your risk tolerance. Research funds that align with your goals. Check fees and expenses. Look for funds with low expense ratios to maximize your returns. Open an account. Use a brokerage platform or work with a financial advisor. Start small and invest regularly. Begin with a small initial investment. Use strategies like SIP, Systematic Investment Plan, to contribute consistently. Benefits of mutual funds. Diversification. Reduces the impact of poor-performing investments. Affordability. Access to a wide portfolio with minimal capital. Liquidity. Buy or sell mutual fund units easily. Professional expertise. Rely on fund managers for strategic decision-making. Risks to consider. Market risk. Performance depends on the market's overall health. Fees. Expense ratios and management fees can eat into returns. Lack of control. You rely on fund managers to make investment decisions. Tips for successful mutual fund investing. Do your homework. Research fund performance, management team, and track record. Think long-term. Mutual funds work best when held for years, allowing compound growth to work in your favor. Rebalance your portfolio. Regularly review your investments to ensure they align with your financial goals. Mutual funds are an excellent starting point for anyone looking to grow their wealth, without the hassle of managing individual investments. By choosing the right funds and staying committed to your goals, you can harness the power of diversification and professional management to build a solid financial future. Start your journey today and let your money work for you.